Shankar, you wanted to come in on the aspect about consumption. We've heard from several FMCG CEOs during their quarterly earning calls where they've spoken about signs of urban demand weakening, and they're very concerned about it.
So where is India's consumption lie? I mean, in the large 60-70% of the population is at the frontier goods, where it's the low price goods, the entry level goods. And that's where consumption is struggling, which is visible in some of the categories. Now, without going into which data point, whether organized, unorganized, listed, unlisted, all that, let's forget all that. Okay, look at the GST collections. The GST collections is growing at a slower pace than the nominal rate of GDP given by the first
We have that chart, we'll just pull it out and play it for our viewers. Okay. Go on.
The second part of it is that, when we say that 61% is the consumption as part of the GDP, I'm a little mystified, and when I saw this data yesterday, I was wondering whether the share of consumption has gone up or whether the share of other segments of the industry, agriculture have come down, because the share of GDP is a sort of relative picture. So when you say that consumption as part of the GDP is gone to 61%, I would wonder whether the contribution of industry, agriculture, services has come down. We do know that until the first half of the year, agriculture was larger than manufacturing in the GDP data. So without going into that, look at all the data, all the stock market reactions, the reactions of what's happening in the credit growth. So private companies, the top 10 companies are sitting on over 7 lakh crores of cash. Why are they not investing if consumption is growing?
That's a very important question.
Yeah, I mean,
some of the companies are, and I think Arvind Subramanian made the point that the national champions are, and the others are getting toughed out because they're worried that they may not have an equal playing field. That's an important question. We'll get into that in just a moment. I want to get in a word from Dinesh Kanabar, Chief Executive at Dhruva Advisors. We also have Manoj Gaur, he's the Chairman and Managing Director of Gaur's Group, the real estate company, and is Chairperson this year of CREDAI. Let me go across to Dinesh Kanabar first. He's a top tax advisor, and all jargon aside, given the fact that the Prime Minister indicated that Lakshmi ji will shine on the middle class and on the poor, everyone's now trying to decode what can that potentially mean, Mr. Kanabar.
So if you see the overall tax collection, and I was just listening to the comment that the GST growth has been less than the GDP growth, which I agree with, but overall the tax collections have been fairly robust. And where are they coming from? So there has been a huge increase on account of securities transaction tax, which is borne out by the buoyant capital markets, the IPOs that have happened, etc. And there's a lot more collection from individuals compared to corporates. So the government has a pot of gold, so to say, available to it. And the question is that, are we looking at raising the threshold limit for taxation? The government is trying to push everybody towards the new tax regime, which is a right thing to do, with which I totally agree, that rather than have exemptions and whatever else, which are artificial in nature, let people make investments in the right manner. And therefore, how is it the government can increase the threshold? Can it lower the rates of tax up to income of, say, 15 lakhs of rupees? Because when that happens, what happens, Rahul, is that a lot more money is available to people who have a propensity to spend it. And therefore, that gives boost to consumption, that gives boost to GST collection and everything else. So it's high time that the government looks at all of it. And then there is this whole question regarding capital expenditure. And everybody mentioned about how capital expenditure needs to go up. And the one recommendation which has been made to the government is that there was a scheme which got aborted a couple of years ago, which was a lower tax for new manufacturing companies at 15%. And maybe that needs to be revived, because if we are looking at huge amount of investment coming into chip manufacture and whatever else.
But I'm not sure, because, no, one second, can I counter you, Mr. Kanabar, to say that the government reduced corporate taxes substantially a few years ago, and that didn't lead to a virtuous investment cycle. A lot of these companies pocketed the extra profits, their balance sheets look much greener and cleaner, their debt levels have come down, it didn't translate into higher salaries for the working class, and therefore if it just leads to higher profits, I don't see how that's a solution, because the government, it's not as if it's not being tried, it's an idea which in principle seems appealing, but in the last 6 years, we haven't seen it play out in the way that you're suggesting.
Rahul, you yourself answered that a little while ago. And I think I would agree with that point to say that no company would want to sit on idle cash. If they saw that the investment was yielding an opportunity, they will all want to make an investment. The question is, are they seeing an opportunity out there? I've heard this over and over again. And I do, to an extent, empathize with this point which is being made, that neither have salaries gone up nor has capital happened, and therefore companies are wanting profits. No company would like to keep idle cash. No company would want to say that there is an opportunity available for me to grow, but I will not grow. It doesn't work that way. So if people are not investing, it is because they are not seeing that opportunity, number one. And number two, when I'm talking of new manufacturing companies, here we are rolling out PLIs to go back and say that you make large-scale investments. Now look at what did Trump say at the World Economic
No,
Forum.
but I want to counter you again, Mr. Kanabar, because what you're saying again seems logical, that no company want to sit in idle cash because that's not a productive use of the asset. But the fact is that that's the way it's been. Capacity utilization has been in the mid-70s for a very long while. We're seeing sectoral increases in capacity expansion, but it's not all across. So therefore, despite the situation, and it's not been this way for a few quarters, it's now been this way for a few years. So you've been sitting on that cash, capacity utilization, which in economic books is in the mid-70s, which would suggest that it should lead to a further expansion cycle. That's not happening. So we've been, the question is, how do you break out of the current logjam that you're in?
And that's what I was making, that it's really not just one or the other. So first is really, are we increasing consumption? And I spoke about how increasing the threshold limit and reducing the rates of taxes up to 15 lakhs is going to leave some more money in the hands of people who have a propensity to spend. And therefore, the money goes in, consumption revives. And just going back, and I was making this point earlier on, Rahul, that I was hearing President Trump talk to World Economic Forum. And he was mentioning that multinationals, you are free to manufacture elsewhere and import into USA. And I'm going to impose tariff on you. Otherwise, you make in USA, and I'm going to give you a rate of tax of 15%. Now, this is what if USA is doing, will India not have to counter it? If we have to invite investment here, and we have to tell people
But we've
that
already reduced corporate taxes so substantially. Surely you're not advocating a further reduction, because it also happens in the political realm. The likes of Rahul Gandhi, Mamta Banerjee, they'll be hammer and tongs. आपने अपने अमीर दोस्तों को दे दिया, अब आप और उनको कर रहे हो. So there's a very strong political consequence of your suggestion.
Yeah, Rahul, I am not saying that reduce the corporate tax. That's not what I meant at all. Today, we have two rates of tax, a 25 and a 30%, depending on whether or not you are opting for incentives. If you are opting for incentives, you pay a higher rate of tax, otherwise you pay a 25. There was a scheme for a period of 6 years, which was for new manufacturing undertakings, new manufacturing companies. And I'm saying revival of that, because one of the stated objectives of the government is manufacturing in India. And that's all that I'm saying. I'm not saying reduce across the board. I'm saying you want to make large-scale investments. And you could actually do it sector-wise. You may not make it all across. You may come back and say that for investments above a particular amount, say if investment is more than 10,000 crores of rupees, and you are generating more than X number of jobs, then you are entitled to a lower rate of tax. But all that I'm saying is you have to provide a level playing field to people.
That's an interesting suggestion. Let's see whether, and especially given what Donald Trump is doing, whether the Prime Minister and his Finance Minister feel inclined to do the same thing in India. Dinesh Kanabar for joining us. Thank you.